There is a case for more monetary easing, and I think we will get that. 5.15. I think we'll get another cut before the end of the year. Although headline inflation has moved back up recently, core inflation's been going down. And once you're in this stage of the cycle where there's been a clear decline in credit growth, it's too late then to really be kind of thinking about what's an appropriate real interest rate in the medium term. Yeah, I think there does need to be more monetary policy easing here, not least for a sort of from a confidence perspective. So I think it should happen. I think it will happen.
Brian, can you give us again a slightly broader view on this issue of real rates from your experience of studying perhaps other emerging economies? Is there an optimal or a range of real interest rates that is conducive to growth in emerging economies? A former governor, when Raghuram Rajan was here, had some sort of a benchmark of 1 to 1.25%. Since then, the central bank says they've abandoned looking at real rates, even sort of as a back of their mind indicator. Do you have a sense of how one should approach this?
Look, I think when you're talking about changing the monetary policy regime, as happened in India a few years ago, and they introduced the inflation target, an economy like India that's had a history of high inflation, there's a credibility question when you're going through that regime change. So I can see why it was important to sort of signal that there would be positive real rates was important, that the central bank was sending that signal in order to make sure that everybody believed that they would stick to the new inflation target regime. I think where we are now cyclically, with inflation having been so low recently, and these issues in terms of growth, I think those sort of medium-term credibility issues really are a little bit secondary at this point. This is more about the appropriate cyclical response of monetary policy. So yes, medium-term positive real rates we think are sensible. Of course, we are now in a global environment where that's less relevant in terms of avoiding pressure on your currency than it would have been, say a year ago when the Fed was in tightening mode. So I really think this has become a little bit of an academic issue at this point in the cycle, to be honest.
All right. Brian, I see from your note that even in the next 2 years, you see growth which is lower than what one would have expected a few years ago, 6.2 in 2020-21, and then 6.7% the following year. What do you think is going to weigh on growth? Will it be the credit issues, the financial sector issues, or do you see broad sort of global growth issues also weighing on Indian growth in the next few years?
Well, I wouldn't sort of put India at the top of the list of the economies in the world that are most exposed to world trade, but that doesn't really mean that it's immune. So I think those global factors are going to be important for India, even though it's a relatively closed economy. I think it's more to do with these issues on the financial sector side. All of the indicators now are kind of heading south. That's quite unusual in India. Normally there's a mix of indicators going one way or another. So it does look like we are still in a very weak environment near term, and with these issues on the financial sector side, don't really see much scope for any kind of near-term significant rebound. We're still put potential growth in India around 7% when we look at population dynamics, look at the demographics, and we look at longer-term productivity trends and the investment ratio. But we think it's going to take a while for us to get back up there with this global environment and these financial sector issues and the problem with confidence. I know we've got significant corporate sector tax cuts have happened, but capacity utilization rates are declining in India, and final demand looks very weak. So it's hard to see that firms are going to immediately respond to having more cash in their pockets in terms of doing more capex at this point in the cycle. So I think we're in for a couple of nasty years on the cyclical front in India.